Last market with us here on the network, but now let's bring in our next guest. That's going to be Alan Nuckman, Chief Market Strategist at BullseyeOption.com. Alan, welcome to the show. Welcome to the studio.
Good morning to you.
Yeah, optimism for equities. Now, I want to get your take here before we get into a discussion about commodities, because it seems like that 50 basis point cut triggered the fact that, hey, we're going to see the first positive September in 5 years for markets, and that's a good thing because of what the Fed's done.
Well, I'm optimistic for everything, not just equities. I'm optimistic across the board. We're in an everything bull market, essentially, with the exception of crude, and we can talk about that at the end of the segment because that is the outlier. But that's got the best risk-reward, in my opinions, and it's got some positive signs. And as an options trader like you, there are good limited risk ways to position yourself for the future when things can change, because it's looking like it's bad enough to buy. But getting back to equities, we're in an everything bull market. We've seen a full V recovery in the S&P. Right. The NASDAQ is closing in on that. So full V recovery in the S&P targets 6,300. And then you look at the NASDAQ targets 24,000, which is 20% up above here. So rates are down, dollars down. And that's the key for me, is this dollar dive. And that's going to be supportive of everything in the marketplace. With, it's interesting that oil hasn't reacted positively, but everything else has.
Okay, so you give me those price targets, 6,300 for the S&P 500, 24K for the NASDAQ. I mean, what's your time frame on that? Well, because we've got an election coming up. We've got historical...
We are in a bull market. We're already up 20%. So at any time, we can see some profit taking and some pullback. But like your last guest talked about, it's not how the markets act, it's how they react is most importantly. We have seen some amazing rebounds on any profit taking. There are so many people with built up profits, and I know this is a future show, so we need to talk futures, but you've got to talk about the psychology and the mindset. Right. People have huge unrealized profits. Right. And you know how the exit goes when people start wanting to take those profits, that you can get sloppy. But the next thing is to see how the markets react the next couple of days after that. And every time we've seen here, we've seen huge rebounds.
Yep, and we're in that buy the dip mentality. Oh, that's probably why we're seeing the sustained growth for a lot of these indices to all-time highs. But what's the risk? So I always start looking about, especially when I'm trading, I think about how much I can lose as opposed to how much I can get. You have to think of it.
That's number one. Can you live with the downside? What's the worst case scenario, and what percentage of your account, and what impact does that have, not only monetarily, but psychologically? Right. Because this is more of a game of psychology than anything else. Right. So making money is not hard, but keeping money is.
And that's the thing. That's what I'm scratching my head about is the risk that I'm going to miss the next 2%, 3% to the upside by the end of the year, or is the risk that we got an election coming up, October, earnings season kicks off.
That we got 3 weeks to that.
We might have some revisions moving forward there. Is there more risk to the downside where, hey, we might need a 5 to 7%
You've got to understand yourself, more importantly. Yeah. Are you more upset that you missed the market, or are you more upset if you got in and it sold up and you saw some profit taking? It depends on you personally. Right. But again, trade with options. You don't have to be as precise. You can ride through some ups and downs, some waves, and understand how the markets react and look big picture instead of being very, very precise.
Right. Let your winners run.
Right.
And so don't be a trader.
Right. You can peel them off. There's a lot of there's a lot of things you can do. But what I want to talk about today is how it all comes back to commodities. Right. Now we've seen this equity move, and you have to attribute everything that happens in the stock market to the commodities market. There's the building blocks for everything. The futures markets drive everything. Interest rates obviously are the big driver. Right. That's a huge commodity. Mm-hmm. We've been focused on that. We were here for longer. We weren't higher for longer, but we were here for longer. Right. And now, now it looks like we're going to see another half-point cut by the end of the year. So that's all stimulus. And like I said on Monday with Oliver, stimulus is contagious. And you saw China. I didn't know China was going to do that, obviously, but I said stimulus is contagious. Yep. And now let's see what Japan does. If they heighten their rates, then we're going to see that's an added stimulus to us, because that drives our dollar down as well. Right. That $100 level has become a base. It dipped below it. That's what I was looking for.
Just dipped. But now let's get into this commodity discussion, because I want to hit this. Gold, the dollar's firm today. Yields are up today, and gold's still hitting fresh all-time highs. The gold bugs are loving this.
Yeah, gold is just a straight-up market, and it very rarely dipped here. We saw where it traded between 2,400 and 2,550. Yeah. That targets $150 move on that high, so that's 2,700. So The opportunity for me, I still see, if you want to look at gold, is GDX.
Yep.
GDX is gold miners. The gold miners have the gold in the ground.
Right.
They have the gold, okay?
Right.
They own the gold. They're like a bank, but they're not being priced like they have the gold. They're not being priced like gold's at all-time highs. And if you look at GDX, the gold miners ETF, that is still significantly off its high from 2011 it was. It was trading at 66. We're at 42 now. So we're at a 30% discount, and they have the gold. So, I mean, figure that out. I think there's great risk reward there in the gold miners. They haven't gotten hot yet like gold, but I think where the opportunity lies is silver. And, silver did trade for $100 an ounce here just yesterday.
Right, and then silver,
No, you didn't get my joke. $100 an ounce with the coin, that you could buy that coin for $100 an ounce.
Right.
But, we're sitting here trading at what, 32?
Right.
A breakout to this high at 34, that target's 40, and 40 is still significantly below that high at 50 that we've had years ago. So we've got a long ways to go in silver. The risk reward is there on silver. And I still think a lot of opportunity exists there.
Give me your take here. If the dollar firms up, stays above these support levels at the $100 level, Japan comes out maybe with something to support their economy, or maybe hikes rates or something like that. Does that provide the headwinds for this commodity rally that we've seen?
I don't think so. I mean, I'm a price guy. I like everything. The dollar's down, the VIX down, interest rates are down, the S&P is up. We've got positive numbers. We've got what we want. We've got a very much a Goldilocks scenario. I'm going to come out here and say it, and I've said it many times before. They played this absolutely perfectly. This has been the most transparent Fed in the history of the world. They talked about how they're going to raise rates. They talked about how they're going to cut rates. They did. The economy is in an amazing spot for that. And I still think there's, huge opportunities, because the commodities markets could be in a super cycle with this dollar down.
Right.
For the whole time you and I have been trading, the dollar's been between 80 and 120.
Right.
What's the midpoint of that? 100.
Right.
A dip below 100, they could really get this whole market screaming again.
Yeah, I like to look at charts from a longer perspective. Everybody, that base is look at a 1 year, 1 day chart.
30
Always
years.
widen those
30
out.
some years.
Always
I'm
start
not saying
widening
how
the-
old you are or how old I am. Lastly, let's talk about oil. Oil's got risk reward. Oil companies, and again, it comes back to the commodity. Oil companies, I've got Apache, Halliburton, Oxy, and Schlumberger, all made recent lows, but did not make new highs and implied volatility. That's often a sign of a sentiment shift. So if you can look at some 6-month options in those, I think they may be making a bottom base, and you're not trying to pick a bottom, you're just trying to pick a gentle turn.
So let me get this straight. So if you've got crude oil down at these levels, and they've talked about the demand is starting to wane, even with China's stimulus, even with the hurricane, even with geopolitical risk, if the economy is doing that well and Fed's in their rate cutting mode right now at this point, isn't that where the opportunity is?
Right, that is the opportunity. But you would think that crude oil would be better
Exxon,
than it is.
Chevron,
But I try
Schlumberger.
not to think.
Yeah.
That's my first problem. I trade what I see,
Right.
and I'm starting to see some smart money accumulation. I follow a money flow indicator, and you're starting to see some smart money long accumulation in these stocks and in the energy sector, and the risk reward is definitely there. Again, there's so much upside potential. I don't know what's going to be the catalyst. You thought maybe the hurricane. You thought maybe China. I don't know what the catalyst, but I don't get paid for picking the catalyst.
Right.
I get paid for picking direction.
Right.
And I think there could be some potential. If we get back above 75 is the midpoint of the last year and a half,
Right.
then you're going to see some scramble, and I'd rather be on the long side than the short.
Yep, opportunities there. And Alan laid out his plan. Risk on everything at this point. Commodities.
But be selective and be
stocks.
smart and trade options so you have limited risk, and I can sleep at night.
Yep.
That's it. That's what I do here.
That's my mantra. I love that. All right, great stuff. Great discussion. Thanks to Alan Nuckman, Chief Market Strategist at BullseyeOption.com. But coming up after the break, Mike Zaremski, he's going to join us to cover those Micron earnings and the impact of the